Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with James Van Straten and Malcolm Palle. Thanks for joining us, guys. I'll give a quick intro. James is a leading Bitcoin and macro analyst known for his in-depth market insights and data-driven research. He provides strategic analysis on Bitcoin adoption, institutional trends, and macroeconomic factors influencing digital assets. And Malcolm Palle is the co-founder and executive chairman of Coinsilium Group and Forza. So again, thanks for joining us. And Malcolm, do you want to start with some of your background and kind of all the way to where we are now? And then we'll throw it over to James as well.
Sure, that's a long way. I'll go back a limited time. Thank you very much, Tim, for having us on. I'm co-founder and chairman of Coinsilium, and Coinsilium has been going for nearly 10 years. Well, a little bit more than 10 years, but we've been listed as a public company since December 2015. So we were in this space pretty much from day zero as far as it being sort of on public awareness, probably a little bit too early. But before that, before we formed Coinsilium, I've done lots of different things, mostly entrepreneurial. I've been in mobile comms, in .com and insurance, and always looking for opportunities. I was investing in gold from pretty much 1999 in gold miners, and then I found Bitcoin, and that was kind of a revolution, and went down the rabbit hole. And in 2013, and we established Coinsilium in 2014 and listed in 2015. So even before other tokens were there, Bitcoin was the only thing around when we listed the company in London.
And James, do you want to give a little bit of your background and your journey to where we are now?
Yeah, thank you for having me on, Tim. So it's not as extensive as Malcolm. I was probably under the age of 20 when Coinsilium got listed. But yeah, I've been in data for about 6, 7, 8 years, and found Bitcoin in 2017, pretty much straight out of university. And it was the volatility, the 24/7, and huge returns that drew me in. Um, and then you kind of learn it through the bear market, understand what's going on. And then COVID was obviously that inflection point, which kind of, I think, was a big inflection point for everyone. So I was previously at a hedge fund, Seidler and Co, where I was learning derivatives and on-chain analysis. And then a couple of years later, I went to CoinDesk, where I am now doing everything that you said in the introduction.
And Malcolm, can you walk us from Coinsilium through the journey, including Forza with Bitcoin and the strategy that you guys are endeavoring on now?
Sure. Okay. So Coinsilium was set up as an investor in startups in the crypto space. It became apparent very early on that for Bitcoin to work, it needed an ecosystem. And then Ethereum came along, which enabled smart contracts. And we were initially investing in projects that were connected with the ecosystem, and usually through tokens. These were kind of the methodology at the time. It's the economic interest in tokens, and we were sort of kind of weighing up whether the right model was to take equity in these early startups or tokens, and that's a learning process in itself. And in 2018 was probably, well, 2017 and 18 was seminal years for Coinsilium, because we ended up as pretty much advisors to a lot of quite large projects. And our CEO is Eddie Travier, who's really the crypto guy. He's the guy sort of who guides our strategy. I'm more on the corporate side and investor communication side. We started with Eddie's kind of profile, started working with some large projects, and offered advisory services to them. And we did quite well in that term, because we were associated with companies which raised on aggregate about 500 million USD, and we booked revenues of just under 1.7 million in the year 2018. Now, obviously, with the volatility in this space, you go through different cycles, and after that, there was the bear market, and we evolved as we went along, making follow-on investments, and we've got. Fast forward to where we are now. We started watching what was happening with particularly initially in MicroStrategies and or MicroStrategy, and we generate revenues, you see, through in crypto, so through our advisory services, and we also get exits from investments we make in tokens, and we've always had a treasury of sorts within Coinsilium of tokens that we have literally through our own initiative recycled into either other investments or into Bitcoin, recognizing that Bitcoin is kind of the king of cryptos. That was why we kind of sustained ourselves with through buying crypto, not buying crypto, but earning crypto and getting exits and returns, and then putting that into either new investments or into running the business or buying Bitcoin, and a combination of all those things. So it became pretty obvious to us what we should do. And whilst as a kind of a venture business, treasury was not our main business. It was just a byproduct of what we grew. So we decided that rather than hold our crypto and also our projected revenues, which will be coming in this new cycle with the new advisory clients we've got, we should set up a discrete vehicle for managing that. Because there's three ways, if you're focused on Bitcoin, there's three ways of getting Bitcoin. You either buy it, you mine it, and if you're very fortunate, you can actually find yourself in a position where you can earn it. Now, we don't earn directly in crypto, but in Bitcoin, but we earn in crypto, and we can recycle that into Bitcoin. So with the evolution of these treasury businesses, we thought this was a great opportunity for us to actually set up a discrete vehicle. And we have done that in Gibraltar with the assistance, because there's regulatory kind of considerations as well. Certainly different to what is going on in the UK, in the US, but there's still considerations of what that entity would be if it's purely involved in running crypto treasury. So that's the reason why we set that up, and now we're sort of on the verge of launching it, and we're refining everything. James has joined Coinsilium as a strategic advisor, and he's going to help us with our particularly the strategy when it comes to actually maximizing the Bitcoin that we hold. But we've also got other strategies within there. We've also taken on a sort of an automated process whereby we'll be also holding stablecoin. And we'll be looking to generate a yield through those stable coins. And we have an automated process through another company that we've invested in, a project we've invested in called Automato. And that will be running autonomous agents using stable coin to generate yield. The whole project, it seems quite complex, but it's sort of we hope to develop it, and we aim to develop it into a well-oiled machine where those stable coins set to work to generate a yield will then be recycled. The gains from that will be recycled into Bitcoin. So we aim to increase the amount of Bitcoin we hold organically by using these DeFi strategies and then converting the gains into Bitcoin. So growing that as an organic kind of 100% subsidiary of Coinsilium, but also with the future of this space evolving as fast as it is, we recognize there's going to be lots of other opportunities that will come up from that. So Coinsilium, as a public company, can sell shares, and it can use those shares to buy Bitcoin if it is in a position to and wants to. It's a little bit too early to talk about how it does that. But the difference between being a dedicated kind of Bitcoin treasury company is that you have to give the investors the assurance of how much of those funds you raise are going into buying Bitcoin. So it's kind of a model that we're early enough to actually be able to get a very good profile and get involved in, but too soon to actually know how it's going to look when it's fully formed.
Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent, institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. That's pretty exciting. James, to the extent that you can share, how much do you guys see yourselves following the MicroStrategy now strategy sort of playbook, whether that's just equity, traditional debt, convertible debt, preferred debt? I mean, they're really kind of coming out with all sorts of different products as we move along. Are all of those on the table, or is it more so, hey, we're going to buy some Bitcoin and then take it one step at a time?
Yeah, you do need to realize as well that you've got the US capital markets and the UK capital markets. And I'm not going to say that the UK is antiquated or less developed than the US, but it's not as liquid. We don't have options on the UK market. So it is harder in some ways. We do have a really, really liquid bond market. So it depends on the strategy. But as Malcolm said, we do have the potential for the ATM share sales. So we do have those avenues. But it's a difficult environment where, for example, where obviously you got the US Bitcoin ETFs launched beginning of last year, where the UK can't actually access any ETFs. So there is a regulatory challenge within the UK, which makes it a lot harder, and you have to navigate in certain ways where the US is a lot more forward thinking and open to kind of developments. Would you say that's fair, Malk?
Yeah, I mean, don't underestimate the challenges we have in the UK from all directions, regulatory wise. The FCA came out with a specific kind of approach, which 3 years ago, 4 years ago, when they kind of imposed this effective ban on retail investors
Yeah.
buying.
2022, I think.
Yeah, 2022, having any exposure to crypto through, and well, I say that they have got, there's a methodology. I mean, you know, any entity that wants to offer retail crypto exposure needs to be on the FCA register for doing so, and it's been kind of a little bit of a quagmire for new entities to get on, and then barring of kind of ETFs or ETNs or anything that's referencing crypto is also another challenge. So retail investors don't have access to this market as in the same way as they do in the States. We're a little bit different, but then we're not a pure play, you see, because Coinsilium is an investment company, and we've set up this division, but it is only part of our operations. It's not our entire, you know, it's not what we do. What we do is we invest and we advise startups in this sector, and we're using Forza to manage our own crypto. So it's quite clear that, you know, we don't fall into that bracket. However, the difference being is that people who buy our shares also know that you know that they're buying into an entity which is a venture business, and they get exposure to the space generally. But when we launch Forza, we'll be able to explain talk a little bit more openly about Forza's performance, and how it's will be able to report that as a division, and people will be able to make their own decisions as to how much of value is there within our investments, how much value is there within Forza. But as James rightly said, it's a little bit different in terms of actually going out and raising money for a dedicated treasury company, in using all those sophisticated methods that are used in predominantly in companies in the States. So we have to do it a little bit differently, and we are, as I said, feeling our way because this is not fully formed yet.
Yeah. So Tim, as well, just to understand, there is and as we know, there is a premium to MicroStrategy, or we know there's a premium to Metaplanet, or these other US listed companies. And we don't know how much of a percentage, but I think UK retail have contributed to that premium of these Bitcoin treasury companies as they're banned. So we've got big brokerage accounts like Hargreaves Lansdown, and you can see the most purchased stocks, the most sold stocks, the most traded stocks. And MicroStrategy is up there in the number one, two, and three spot on a weekly basis for a number of years now. But we don't know how much of that, obviously, volume is contributed to these equities. We don't actually know how much that is. But we know that the UK retail market is completely starved of Bitcoin. That's a
Understood.
guarantee.
Yeah.
So that's something that we're hoping that we can actually contribute to the UK as a market. And we're talking from the UK here, which is one of the largest financial markets in the world. So, but yeah, it's to get your head around the US and the UK, they are completely two different entities. For example, as well, Jacobi Bitcoin ETF, it's an ETF, it's not even an ETN. An ETN is obviously it's a debt instrument which promises to track the asset's performance, where the ETF actually holds the underlying spot. And they wanted to list in the UK, and they couldn't even list in the UK, so they had to go and move to the Euronext in the Netherlands. Um, I think there are a number of ETN products in Europe. Again, retail can't in the UK can't actually buy them. So the only way the UK retail can buy Bitcoin is either through a MicroStrategy or literally Bitcoin off a Coinbase, which is actually being more and more difficult. And the last thing is we can't even buy IBIT, the BlackRock ETF. There are like key investor documents that are required under like UK law. So we can't even buy ETFs, spot ETFs. So you can then imagine how underdeveloped or starved the UK market is. We can look at our equities market, it's only grown like 20-30% in 15 years. So our logic is there is a huge appetite for the UK market.
Could either of you talk a little more generally about the landscape with exchanges and platforms over there? James, you mentioned Coinbase. Like, what is the process to actually, for an individual or a corporation to purchase Bitcoin? And are there several different institutions like Coinbase, Fidelity, Gemini? I mean, those are the custodians over here for the ETFs, as an example, right? But you'd have like one bank in New Jersey that you have to wire the money to for Coinbase. So it's still, even in the US, like, yikes, maybe we'll get some more banks involved. So yeah, just curious to let the audience know kind of what is the landscape and how restrictive is it for individuals and corporates at this point?
Yeah, there's a difference if you're I don't know, if you're an investor, and there's certain clarity of an investor. You earn a certain amount, or you have a certain net worth, then you can actually buy an ETF through like a regulated entity, something like that. But there are certain laws. And then through the exchanges, I don't know if it's the same as the US, but you have to go through this whole compliance form. It's like 10, 15 questions. and they really try and regulate and block. I think it's a similar process in the US, where all we do have is exchanges, but from my knowledge, we don't really have that institutional setup here. Correct me if I'm wrong, Mark, on that.
Well, they kind of they say for buying these products that reference crypto pricing, ETNs or ETFs through a stockbroker, you would need to be considered and classified as a professional investor.
Yeah.
And to do that, as James rightly said, you need to have a certain income. You sometimes it's self-certified, sometimes depending on the processes with the broker, they require some documented evidence. You also have to demonstrate that you do a minimum of so many trades a month. And they have a very clear, it's set out by the FCA, the Financial Conduct Authority, of actually what determines who a professional investor is. So those people have got access to these products through brokerage firms, which is how people buy shares in Coinsilium, for instance. But as far as buying on an exchange is concerned, yeah, they're really, the way the regulation has been sort of established and evolved, it's been to prevent a lot of innovation because of the fear and the concerns that this whole space was potentially dangerous for retail investors. So it's coming from that point. I would say that there are moves, I think, to review the regulation, and I certainly think that with what's happening in the US, that's going to drive a lot of prioritizing, changing and evolving, adapting. But regulators don't move quickly unless there's an imperative to do so. So I think that the environment will change in the UK, but it might take a little while. I don't think anything's going to happen this year. But I say this year, even if it does start moving, it won't happen till much later on. These things don't happen quickly. And also involving a regulator to do a 180-degree turn is not an easy thing to do, because they have sort of painted themselves into a bit of a corner on this. And then with what's going on in the US right now with this summit on Friday, I think at the White House, is obviously going to put the US in the forefront. And so it'll be interesting. And as James said, there's a dearth of products, dearth of access to this space. So this is something we see as an opportunity to differentiate ourselves. And it's important to actually, I think, provide the education, which is another reason. James is obviously someone I've known a little while, watch his progress. He's doing amazing stuff at CoinDesk as well. But I think one of his main fortes, and I'm speaking for you, James, is education. And it's so important that people understand the basics of this and what they're actually buying, because there's a tendency to look at these kind of things as punts and gambles, and it's exciting, and but ultimately when you understand certainly the fundamentals of the difference between Bitcoin and any other cryptocurrency, most people we come across, if they're getting into this, they don't see the difference. They don't start from that point, and that's really important. Really, really important. It's something we can certainly discuss, because I was talking to someone earlier who's thinking of putting some money into crypto, and he's asking me what to put in, and what tokens should he buy, and then you've got the kind of tendency to look at it as top 10, top 50, whatever there is. So I kind of start with asking the question. So, well, he knows a little bit about crypto, he understands what Bitcoin is, so I start to look, Bitcoin, who's the CEO of Bitcoin? And
it might be James.
Well,
it might be James.
You never know. Well, we don't know actually who who obviously we don't know who Satoshi is, but then again, he was never a CEO. There's not a team, there's not a business, there's not a project behind it. And that's how you differentiate that between Bitcoin and any other token. And then you're looking at tokens, and I'm not averse to those, that as a concept. I mean, I know people, have very kind of particular views on tokens. My view is, in abstract, you should look at these in the same way as you would look at equities, because although the economic interest is not through a shareholding or ownership. There is an economic interest there. And if the project is set up as it should be, and that economic model works, and the benefits flow through to the token holder, then that should work. Now, the problem we've got is that a lot of them don't, and that's the issue. And I think that's how this is probably going to evolve, because once you sort of talk about meme coins, well, they clearly don't have any economic model, but the I believe that the utility will out eventually, and that's how that'll evolve. But quite clearly, there's nothing that matches the same standard as Bitcoin. So the idea of setting up a treasury company and putting anything else than Bitcoin in it with the view to actually enhance the value of your assets, then it doesn't make sense.
Yeah. So what strategy, Metaplanet, Semler, they've all adopted the Bitcoin KPI metric or increasing their Bitcoin per share, Bitcoin yield. So it's same as us. We're trying to accumulate and acquire as much Bitcoin as we can, but in a risk adjusted manner. And I think it's been interesting watching every single equity take a different stance or a different viewpoint. Metaplanet have gone a completely different way to strategy.
Mm.
And if we look at strategy, so it just had like I think a 60% drawdown, and it's had 7 or 8 drawdowns since it started in August 2020, which is quite incredible. And I kind of see strategy as what Bitcoin was back in like 2017, where we had these 50% drawdowns kind of. It was quite usual.
Mm.
But you then obviously have he did the recent convertible note of I think 2 billion, and he bought it at 97,000, however many Bitcoin that was, 20,000 also Bitcoin, and then the price tanks 20%, 25%, and everyone's like, is he going to buy any more? Can he buy any more? But
Mm.
his whole, obviously, I'm not criticizing him, and I'm a long-term shareholder in MicroStrategy, and that's one of the going back. That's a UK investor. You can only invest in MicroStrategy, so that was like our whole my whole pension was in MicroStrategy. So, but going back to strategies, a unique model that they can only essentially buy the top. So with the ATM share sales, they can only sell shares into the market when MNAV's at a premium, and then the convertible notes, they can only kind of get the demand for the convertible notes in a buoyant market. So when the price goes down, they're not a buyer. So our idea for Forza is to kind of be a buyer on the highs and the lows. So you get that risk adjusted
Mm.
returns, and you're also then trying to set yourself up where you know those 20-30% drawdowns are coming. So you have to try and then be in that position of strength in bear markets or downturns. So that's also as important as being strong in bull markets. So there's all different factors there.
Yeah, I think these are things I know that James is talking to me all the time about, and we sort of looking at what will what we can do and how we can differentiate. I think it's probably too soon to kind of think about how this stuff is going to play out and be deployed. That would be ideal if you can actually get into the market and buy the dips, and recognize them as the dips as what they are. Then that's great. But I think our clear distinction is that, we are a couple of steps away from it. But when our um, token sales, the token vesting works, and we get funds to feed into Forza, it's how you manage those funds until you get, and when is the opportune time to actually buy the Bitcoin and then sort of hold it. So we won't have the same challenge. I mean, look, we won't have anything like the scale. We're completely the other end of the spectrum to strategy, and you've got to play the model on the basis of what you've actually got. So it's a totally different model. And we really don't know how it's going to play out. But all we know is that it's worth putting the stake in the ground now, worth setting that up, and then see where it takes us, and then exploit the opportunities as they come along. So yeah, it's exciting and interesting, but we certainly are not in a place where we know exactly how it's going to pan out. We just think, okay, let's set it up. We know what we're expecting to come into the company. We know how we can deploy it. But all this clever stuff about how we're going to maximize our holdings by buying them low, and I don't even know how that's gonna play out at the moment. I have to be honest, we can't say that, but we just know we're in the right place at the right time, and I'm sure there's going to be a lot of other issues. My main concern about this whole new kind of initiative, if you want to call it, that has been sparked off by the strategy playbook, is what amount of leverage is going to be built up outside of those core kind of propositions. We know that MicroStrategy is dominating this space. The amount of Bitcoin they have, and anyone who's playing is never going to catch them up. So everything that comes out of this is a leverage position. So we want to make sure that this doesn't have any unintended consequences of actually overexposure. We're not going to put ourselves in that place, because there's no question that this whole space looks like a bubble from the outside, and we kind of know where the aspects of the bubble are, and we also know why, in fundamental terms, Bitcoin isn't a bubble, but there are aspects that are being built onto this that definitely and it's a natural thing to do. It's a natural tendency for investors to look for leverage, leverage opportunity. I was doing this in early 2000s. I was buying gold, and I thought, right, let's buy some miners, because that gives you a beta. It gives, if they, and let's look at some undervalued miners. Let's look at some sub-economic miners, because once the gold price moves above their cost of production, then you get a tear in the share price. So there's lots of things about this that are really compelling, but we just really don't know. It's still a very misty kind of environment. So we have to feel our way through, and certainly not get ahead of ourselves. But all we're doing is great that we've got the profile to get people to know about us. And watch this space, because it will take, we're not going to rush into anything, but we have got a good footprint and foothold, and there's a lot of interest. There's definitely a lot of interest and intrigue. I must admit, our model is not the most straightforward. Buy some Bitcoin, stick it in your wallet, and then put your feet up and wait. If we were MicroStrategy, we'd be sort of following that playbook, but at our end, we have to make our funds sweat.
The Bitcoin for Corporations Conference is coming to Orlando May 6th and 7th. Receive 20% off admission by going to microstrategy.com, selecting Bitcoin for Corporations, and using discount code KOTZ at checkout, and I'll see you there. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Yeah, it's interesting. I saw a post actually today with an ode to right now maybe having like an early 2000s vibe to it, as far as the markets, the landscape, the opportunity. Do one or both of you want to share anything additionally about kind of what your, maybe not timing, but the roadmap and the approach to education and kind of getting out of the opening gates with all of this?
Yeah. So it's not sort of it's not kind of milestones in terms of actually when things can happen, because as explained, this is a new frontier. It's a frontier space, so you don't sort of predict when things are going to happen. But we are launching Forza in Gibraltar. on the 18th of March. James is coming over here. He's going to give a keynote speech about generalistically crypto, sort of Bitcoin for Treasury, and he's going to run through and do what he does when he goes to conferences. We've got a lot of local people who will be coming in because Gibraltar is a crypto hub, so there's a good understanding. There's a lot of exchanges that are regulated here, so we'll get a good audience, and we expect to also live stream that. But that's going to be the start of the education process, and also a brief introduction of what Forza is being set up to do. So once that's done, we'll sort of then start working on how the project is going to roll out. We're still talking to various partners. We haven't announced yet, but they will be intrinsic to actually how we manage our funds within Forza, because you do need counterparties, and we're also integrating the Automato technology to do the yield generation part. So we're a work in progress, but I think that the kind of we'll be sort of unpeeling layers of the onion as and when it becomes appropriate to do so. I don't think we can be, set up in such a way that we know exactly when the next step will be, simply because the market has to dictate a lot of what we're doing. Plus, our revenues, which will be a proportion of what is going into Forza from Coinsilium, are determined by our exits and our success fees on some of the projects we're advising. So until that pipeline is a little bit more predictable as to where it is, and we're sort of on the cusp of that, we won't know how much we've got to play with from that side as well. And likewise, when it comes to actually any other kinds of ways of funding Forza, we still need to make sure that the environment is right for us to actually, move forward. So we're just sort of we're giving investors more kind of visibility than we would be able to do in any other circumstances, simply because of the climate and everything that your president's doing, and all the initiatives that are coming out of the States. We are now in a position we can align ourselves so people know we're there, and as and when we sort of are in a position to talk more about that, we will. But it's not sort of a set timeline, but more announcements will be coming out about more partners, more initiatives of how we're plugging this in, and the jigsaw will sort of start filling itself up.
Have you guys received any feedback from your investors, from shareholders, and what have those conversations been like?
Okay, so by the time this goes out, we will put out a Q&A. Well, we got a lot of questions. I did. James doesn't interface with the shareholders as a director of the company. I do. But they're asking lots of questions. I think most of the questions they're asking, and also market participants. I was in London a couple of weeks ago meeting with brokers and various other market participants, and they wanted to understand how we're going about this and what it sort of what it's going to look like when it's fully formed. So we've kind of put together a Q&A which was based on the questions we were being asked, and that was the criteria. So most of the questions were interesting questions. Some people were asking if it's going to distract from the business that we do as an investor. Some people are asking, why are you doing this? In terms of actually what's driven you to actually look in this direction? Because, Eddie Travier, our CEO, and myself, we kind of, our passion is to identify talent in startups and nurture them and help them with funding, and also getting funding and networking, and seeing those projects grow. That's why we set up Coinsilium. So this is a little bit of a different venture. So they needed clarity on that, which I think we've given them. We're also most important question, I think, from James's point of view: how much are we going to be in Bitcoin? How much are we going to be in other cryptos as well? So we have to be very clear about that. We're not going to avoid other cryptos, but they're not going to form the same element of our treasury. They're going to be a means to an end. I said to you before, I've heard that there's a project that is going to be doing a treasury company with XRP. I don't know how that's going to work, but maybe if the momentum that comes out of this crypto treasury reserve from the US lights a fire under XRP, then everyone's going to look at it on the basis of that. Now, for us, that's not really, that would be a step too far. But we still are going to sort of consider other cryptos on the basis that they are part of that yield generation process. Um, Also, they want to know about updates and how much we'd be able to talk about this because, as a venture business, we don't really whatever crypto we've held has always been disclosed in our financial statements. So, this model requires a different level of disclosure. So we're sort of explaining that. And also, I suppose the excitement is because a lot of it is because the market in the UK knows that there's not really that much exposure that retail investors can get. And as I said, the clear reason why we can do something like this is because it's not our core business. I mean, it doesn't mean that it wouldn't necessarily grow to be much more core. And that's fine because, that's a great problem to have. But ultimately, people wouldn't be buying Coinsilium shares because they reference Bitcoin, but they would know how much of our investment in Forza is kind of can be valued at and also they've got exposure to our other investments as well. So, it's an interesting mix. So the feedback has been positive, but there's still a lot of questions. And the first thing, as I said, we put this Q&A out, which will be released by the time this interview goes out, and hopefully the launch in Gibraltar on the 18th will put a lot more meat on the bone as well. And by the way, our shares are actually traded in London on the Aquis market, but we're also on OTCQB. So our ticker symbol in the US is CINGF. So we are available to investors in the US as well. So we'll see how we can perform with the US markets. I'm not too sure. They've got a lot of alternatives there.
We just have a few minutes left. If each of you
Yeah.
have some closing thoughts and also where you'd like to direct people to find you and the company
Yeah.
online.
Okay. Okay. I think we can talk. There's a couple of things we were sort of talking about is how this space is going to look in 3 or 4 or 5 years' time. So maybe James, James and I have been talking about this because at the moment there's a lot of hype. So, I don't know where this is going to go, but all I know is that, it doesn't seem that there's anything that can providing the fiat currencies are going in the direction they go in. I don't see any deflation in that realm. How this market is going to look in a few years' time.
Yeah, it's I think if you look at Saylor and strategy and how he's evolved, I think he's learning on the job. I think everyone's kind of learned on the job.
Mm,
Um, I think even with Semler Scientific, they were quite a big proponent of no debt. They've now taken out convertible debt. So even if what you thought you'd do, you'd go against. So yeah, I think everyone is it's so early and it's just trying to
mm,
find out it's also your market as well, how much of the risk takers or how much the audience is essentially starved for yield. And you can see it with Microstrategy convertible notes on a blended basis. They've outperformed Bitcoin because the bond market's starved for yield. But the most important thing is to manage your downside risk. So strategy, all their Bitcoin is unencumbered. So none of their loans are secured. They had one secured loan with Silvergate, which they paid off a couple of years ago. So they have full optionality over their Bitcoin. And then once you have full optionality over your Bitcoin, you can then do whatever you want with it. So then the theories are, will there be a bank? And who knows? But that's
yeah.
why there's not no downside risk, but their liquidation price essentially is when their assets go below their debt levels, and that's around $10,000, and that would have to mature in like 3 or 4 years. So like the low probability, it's such a low probability. So
Mm,
he's managed his downside risk, and then it's just about everyone else trying to manage their downside risk as
yeah.
well.
Yeah, I think that's the key. I wouldn't want to get into a situation where we're looking at that and taking on leverage. Certainly not until there's a clear understanding of what that leverage looks like and how you can actually manage it. But I'm sure there will be plays coming in that will add leverage to the system, and that's the kind of concern going forward. But of
Yeah,
course, you know,
no, sorry. The you've got like the miners that are pretty
mm,
levered up as a business anyway, and then they've already taken out convertible debt on top of what they're doing.
mm,
So to make the space a lot healthier, you do want to see different companies from different sectors coming into the space just
yeah,
to try and essentially take the stress levels away from a concentrated few companies. But again, we all know like you want to try and accumulate as much Bitcoin as you can. So the
yeah.
ones that are doing it are going to do it as quickly as possible. So
Mm.
there is a first mover advantage, but there's also a on a risk adjusted basis, and that's what you've got to try and work out as well.
Yeah, yeah. So from Coinsilium's kind of you can find our website, which is www.coinsilium.com. Forza hasn't at this stage got its own website. I would imagine it will do. It's not the first thing that we're looking at. We because it is a 100% owned subsidiary of Coinsilium, so we're going to build it in a managed way. And I'm available at malcolm.palle@coinsilium.com. Um, Also, our shares are traded on the Aquis Exchange in London under ticker symbol COIN, COIN, same as Coinbase,
Coinbase.
not on the same market, and in the US on the OTC market under CINGF. We couldn't get the coin ticker in the US for obvious reasons.
And James, where can people find you online, and any closing thoughts?
Yeah, no, I'm on Twitter with BTCJVS and work at CoinDesk, so go to CoinDesk as well. Do I have any closing thoughts? No, this week has just been insane for Bitcoin price. Volatility's back, which is great to see. The recent correction, I believe, was a mid-cycle correction, bull market correction of 25-30%, which looks normal. And now it's just kind of on Trump and his administration to deliver what they promised. So I think that's what everyone's kind of waiting for now. And as we speak, Microstrategy goes through $300 a share. So it seems like the market's picking up.
Great. Malcolm, James, thanks so much.
Thank you
Cheers for
very
having
much
me,
for having
Tim.
us on, Tim.